Hey guys, it's Bethany Finch with American Made Home Solutions, and it's Win Wednesday. I'm sure you guys are wanting to know, well, maybe not. Maybe not some of you guys. Some of you might already know this information, but some people are completely lost and cannot understand why a multi billionaire like President Donald Trump has no income taxes that he's paying. So if you want to know why, stick around. I'm going to tell you the top 4 reasons that he is not paying income tax. And there are actually ways that you can do it as well. So many people have asked the question, how come President Trump didn't pay any taxes, or they feel he didn't pay his fair share of taxes? Well, I'm going to break it down for you and show you exactly why and how that is, and show you how you can take advantage of it as well.
Really? Thank you.
How does President Trump and so many others, because he's not the only one, get away with not paying any income tax or potentially very, very low income tax? And he's not doing anything illegal, which is surprising to most because everybody feels like if you're evading taxes that you are doing something illegal. Well, I guess if you're evading them, you are doing something illegal. But in this case, it is not.
Tell me more.
So, truth number one, President Trump pays taxes. Yep, he does. What we're specifically talking about that everybody is up in arms about is income tax. Income tax is a tax that you accrue when you have income that comes in certain situations. So, with that being said, we need to break down a couple things for you. So, the number one thing that most people are unaware of is that President Trump owns multiple types of businesses. The type of business that you own determines different things. So, for instance, if you have a business that is a restaurant and that restaurant has employees, servers, hosts, cooks, all that kind of stuff, you're going to be paying employment taxes. There's no ifs, ands, or buts. You don't get to get around those. You're paying employment taxes. So, first and foremost, we know for a fact President Trump has employees of various natures and various kinds because he does have multiple businesses. He doesn't just have the real estate business. He also has golf courses and resorts and restaurants and a multitude of other things, all of which have employees. So he is most definitely paying employment taxes. Those would be your payroll taxes. Those would be your federal FICA, your Social Security taxes. Those items he's still paying 100% of, okay? Again, not income tax. Those are different. The second part of that is with multiple businesses. As a business owner, you get write-offs and deductions based on the IRS tax code. So for instance, if you owned a restaurant, if you had $100,000 in gross revenue, but then all of your employees' wages was $60,000, now it's reduced down to $40,000, and then all of your write-offs. So any business expenses would be subtracted from that as well. Travel expenses, not just payroll expenses, but supplies, fueling, marketing, typical administrative items that go outside like accounting. Even the tax to get your taxes done is a write-off for a business. So all of those write-offs can then offset. Or if he even had a carryover from a previous year, oftentimes when you're starting a business will have a loss in those first few years, and the loss is much greater than the revenue coming in. So you're allowed to carry it over for a certain amount of time and a certain dollar amount. So if you have a loss that you carry over, that also then reduces it. So that 100,000 could potentially be untaxed because of all the other offsets. The number two way that President Trump is not paying, or potentially paying less than everybody feels he should, income tax is because he owns real estate.
Real estate.
When you own real estate, you have a multitude of write-offs that you're allowed to claim on your taxes. Most people know about depreciation. So you can depreciate your buildings for 27 and a half years. So for 27 and a half years, you can take a loss on that building itself. Then you have any improvements. Those are write-offs. If it's, for instance, a multifamily property, not just capital improvements, but it could also be expenses to the actual property, the maintenance, the upkeep, the administrative, the marketing, all of those are write-offs. Yes, it is highly possible because of real estate to once again not have to pay any income tax or very little. So the third way that President Trump is able to not pay income tax or as much as many people feel he should is by investing and having his income come to him in the forms of passive income. So now let me explain, there's a difference between passive income and active income. Active income is what you get when you get up and you go to your job. You're actively working. The IRS says you put more than 4 hours a month into getting that income, and therefore it is active income. So that is taxed at the regular ordinary income bracket. So usually between 30-40%, somewhere in there, before write-offs. Passive income means you are not as involved in getting that income, and therefore less than those 4 hours a month. And because of that, it is considered passive activity and it is taxed at a much lower bracket. That 15% tax bracket, that's the passive income bracket. Now, if you have passive income coming in, you're already reducing the taxes because you're at the 15% bracket. But then all the write-offs from your real estate, or if it was coming in from, for instance, American Made Home Solutions, multifamily syndications, you get to participate in the depreciation and everything of that nature. So if that's the case, then that 15% tax that you would have had to pay will get reduced even more, and you could potentially have carryovers because the depreciation on a multifamily property is much greater than just a single family home. Yes, it's still spread out over 27 years, but there are ways that it can be accelerated, and because it's a much larger number. If you think of the depreciation on a one house, and it might only be $1,000 a year, but now you have 100 units and it's still $1,000 a year, times that by 100, now you have $100,000 that you're depreciating. So the difference can be substantial, but especially if you're improving properties, things of that nature. But the passive income is the difference there. So when you don't actively participate in earning that income, and it comes through by a different means, whether it's through an investment, whether it's through like rental income, whether it's through an affiliate relationship, things of that nature, allow that to be more of a passive income. And the IRS says, hey, great, we'd love to have your money in our system, so please keep making it, but don't work so hard and we'll reward you. So you get less taxes there. So the fourth way that President Trump is able to reduce the amount of taxes that he owes on his income is by utilizing tools that the IRS already put into place. So these tools could include a 1031 exchange, it could include a Roth IRA, it could include a solo 401k. These are accounts that the IRS has already stated anything that you do in these accounts or through these accounts, you do not have to pay taxes on them because they are qualified retirement plans. But within those, there's even more distinctions. So for instance, the Roth IRA is a plan that you pay the taxes at the time that you're contributing the funds, but then you don't pay it when you withdraw. So for instance, if you're in a higher tax bracket when you're younger and you contribute that, then you'll pay higher taxes on the beginning, but equally so, you don't pay anything on the withdrawal. Some people choose to do that because they're making more money when they're in their younger years, and they'd rather pay the taxes then and not have to worry about it in their older years when they need more of those funds. It's also inheritable. A Roth IRA is inheritable. So he could have even inherited a Roth IRA account from any of his family members. The great thing about that is, remember, there's no taxes taken when it comes out, only when it goes in. So if someone had, say, gave him an inheritance through a Roth IRA, at that point, he would have then been able to utilize it. The cool thing about this, the Roth IRA, a solo 401k, any self-directed IRA, is you are able to utilize those funds according to the IRS. There's rules and regulations as to how, but you can use those as investments, and that's how you build up your retirement. So if you, like President Trump, which we know he's very intelligent, used those Roth IRAs, those solo 401k, self-directed IRAs to then purchase, for instance, real estate. And normally when you sell a property, if it is above a certain dollar threshold, you have to pay capital gains tax. Well, if it's all done within the retirement account, the money comes out of the retirement account, buys the property, goes back into the retirement account, it is 100% tax free as long as the guidelines are followed. So many millionaires across our country use their retirement accounts to purchase real estate. It is a fabulous tool. That's exactly what it's for. This is how you too can take advantage of all of these fantastic tools. So the secret sauce, the ninja way to compound exponential returns is this: utilizing all four. Yep, that's right. Utilizing all four of them. Good example. Say you bought your starter home, and your starter home, you need to upsize, upgrade, you need to get a bigger home, or vice versa. Maybe you're older and you're retiring, so you're downsizing to a smaller home. So instead of paying capital gains tax on all that profit that you have made on that house, because you've now owned it free and clear and it's well over $250,000 in profit, you do, let's say, a 1031 exchange, okay? So that means you take all the profit from that house that you sold, you still go buy your other house, right? You don't have any problem, you use that. Then you take your profit and you do a 1031 exchange into a multifamily syndication. Or maybe you need some of it. You don't have to do all of it. You can do a certain amount. 1031 exchange has specific rules. So say you use most of it to buy your downsized house, but you still have 100,000 left. So then you take that 100,000, and instead of leaving it in your savings account to make 1% interest, instead you invest that with American Made Home Solutions in one of our multifamily syndications. So the cool thing about this is now that 100,000 goes into one of our deals. Many of our deals have a 3 to 5 year turnaround. Some have a 7-year turnaround. Each one of them is slightly different, but you're oftentimes making double-digit returns. So let's say if it's 100,000, let's keep it simple, okay? So let's say you make 12% on your money. So that's $12,000. So in 5 years, you're still going to get your $100,000 back, but you're also going to get $60,000 on top of it.
Unbelievable.
So because you invested it there, now it's passive income. Then you turn around, if you were really doing the ninja secret sauce, you put that into a self-directed IRA before you invested it. Then all the funds go back into that self-directed IRA. And then 100% of that profit, now you had 160,000, then when you just had 100, and now you get to do it all over again, rinse and repeat. That's how you compound. And remember, you're not paying taxes. That's passive income. You're getting all the write-offs from a business. You're getting all the depreciation, and you're offsetting whatever other income that you're also doing on the side or full-time that you love and enjoy. That's how generational wealth is created, and that is legacy wealth.
Hear, hear.
This is what American Made Home Solutions is entirely excited about. Everybody can do exactly what President Trump did. It is 100% possible and paving the way. It is not out of reach. You don't already have to be a millionaire. It is 100% doable. Educate yourself. Go to some of our YouTube videos and watch and learn and see. Again, you may not want to be an entrepreneur and nobody's asking you to, but you might want to take advantage of the passive income, or you might want to take advantage of the depreciation. And we want to make sure that you're able to do the absolute best thing that you can for your family and your situation. That is why we here at American Made Home Solutions are community enhancers. We work together in all of the communities that we're in, because remember, we're not just in one market, and we want to help you accomplish your financial goals today. So be sure and check us out or click on the link below. And when you do, be ready to answer those quick few questions, and we will get you the information right away, and you can move forward with achieving those financial goals today and becoming a multi-millionaire like President Trump has. Until next time, I look forward to seeing you again on the next Win Wednesday. Bye for now.